Hello everyone, and welcome back. In today's video, I'm going to show you how to spot and avoid pump and dumps. Now, this is a question that gets asked a lot in the Discord, so I'm excited to cover that here, and hopefully this is going to be a great framework for you going forward. So before getting into how to spot a pump and dump, I do think it's important to talk about why we should avoid them. The first thing I do want to say is that it's very possible to make money with a pump and dump. People do it, and it's definitely possible, but that said, I think it's probably not going to be the best strategy for most people. Now, the first reason that I believe this is true is that pump and dumps have the highest risk of becoming a hard rug. Now, what a hard rug is essentially when the developer has some type of exploit that they can execute that steals all of the funds or a lot of the funds in the project. This means you could just have your entire investment taken from you and there's really nothing you could do about it. The second reason is that pump and dumps are going to have the highest risk of exploits. Typically, they have sloppy code that's usually copy and pasted from other projects, and so there are going to be potential vulnerabilities that other developers can spot and exploit and steal funds from the project. Next up is a bit less obvious, but I do think it's one of the most important things here, and that if you enter a pump and dump, you're pretty much forced to time the market, or at least to try to time the market. So pretty much all pump and dump governance tokens go to zero. I'll show you that in just a minute, but given that this is true, you have to decide whether you want to purchase the governance token and at what price you want to purchase it, and then you have to try to time when the top is to sell it. Obviously, directly timing the market is going to be near impossible and something that we just have to hope to get lucky on if we enter pump and dump, so this is another reason I don't think they're the best investment for most people. And lastly is that you simply have a high opportunity cost. So if you deposit $1,000 in a pump and dump, that's $1,000 you couldn't deploy elsewhere in DeFi that would earn you a safe and sustainable yield. So what is the standard pump and dump model? Well, it's really pretty simple when you break it down to these 4 steps. So the first is that a project basically mints a governance token. Then they incentivize liquidity pairs with that governance token, and a lot of people deposit into the project because they want to receive that governance token as a reward for providing liquidity. Now, because a lot of people deposited a lot of money in the project, this project can now advertise a high TVL, or total value locked. The project and the market itself can actually say that we're going to justify a high governance token market cap because the TVL is so high. Now, in DeFi, liquidity is notoriously liquid, so just because a project has a high TVL, that doesn't actually mean anything or justify a high governance token price. Now, you may be asking yourself, well, don't a lot of legitimate projects have, in quotes, useless governance tokens? Well, that is true, and I do hope to address that in this video, but it's important to note that spotting a pump and dump isn't an exact science. There's no perfect formula I can share with you on how to spot a pump and dump, but I do hope this video gives you a better framework when you're judging new projects. Now let's transition to talking about the framework I use on how to judge a new project. So the first thing I ask myself is, does this project actually do anything new? For me, this is really the core question I want to answer. Is the project that's released, is it actually contributing to DeFi and innovating and pushing the industry forward? Or is it just a copy-paste of some other project or some other concept? So a good question to ask here is, does the project actually do anything besides emit governance tokens? Put in another way, would anyone actually use this project if it didn't incentivize liquidity? If the answer is no, a lot of the times we just know right away that this is in fact a pump and dump. Now, if you have questions on how a project's innovating, what are they doing differently, etc., that's where the Discord is a great resource, which is linked below. So a great example of this question around innovation is Iron Finance. This was a project that a lot of people believed in and invested in, but it was something that I was saying was a pump and dump from the start, and a lot of us in the Discord were saying as well. So why was Iron Finance a pump and dump? Where were the clues there that tipped us off? Well, the first was that it was just a copy and paste of Frax. So Iron Finance claimed to have some innovations there, but they actually didn't do anything special. They were really just deploying Frax on Polygon and really adding no unique elements. If you look at the Iron Finance homepage, it's really fascinating here, right? So the first thing they focus on is TVL here. So you can see the biggest thing they're advertising to everyone is TVL, and behind that is a rocket ship. Now, to me, this implies that all they're trying to do is pump TVL and pump the price of their governance token. And if you looked at the mechanics of what they actually did, that's really all their system was doing, was pumping the price of their governance token. Iron Finance removed key safeguards that Frax had implemented, which is why there was a huge crash in the Iron Finance stablecoin. Now, this was obviously a huge scandal. Mark Cuban invested in it. A lot of notable people invested in it. And I think there was at some point $2 billion of TVL. So this was a crazy crash. Again, this project was kind of hard to discern whether it was a pump and dump or not. You really had to dig deeper and think a bit more critically about what they were building. So the next question you want to ask yourself is, are the tokenomics there solely to pump price? The first thing that can tip you off here is if there's a deposit fee or a withdrawal fee that's above and beyond the standard in DeFi. So I remember a lot of forks were happening on Polygon and BSC, and there was a 4% deposit fee to deposit your assets. And right off the bat, to me, that screams pump and dump because no legitimate project has to do this. Now, the next question you want to ask is there even a reason for a governance token at all? So I know almost all projects have governance tokens now, but the legitimate ones actually have some type of plan on how their token will interface with the entire system. To me, this is pretty important. Just seeing that developers have a plan is kind of like the table stakes here, and I do want to see there's a use for the token aside from simple off-chain snapshot voting. Now, the next question I ask myself is the inflation rate of the governance token extremely high to support very high APYs or APRs on the platform? Now, typically with these pump and dumps, you're getting yields above 100%, but obviously they're not sustainable, so they only last a couple days before the project crashes. But as a general framework, yields above 100% are quite often pump and dumps. Obviously, this isn't a rule you can live by. There are some legitimate projects that have that high of an APR or APY on liquidity, but typically that's not that common. So the next thing I look at is the team and the investors. So the first obvious question is the team anonymous? So there are many projects with anonymous founders that are legitimate, but they inherently have more risk. So if a founder is known and a public figure, you have a bit more assurances that that founder or developer won't steal all of your funds from the project. The next question I ask myself is, does the team allow a toxic Telegram or Discord to flourish? You'll notice these communities, if you go into a pump and dump project's Telegram, pretty much everyone there is spamming. They're only interested in talking about the price. They're sending stupid memes. They're really aggressive if anyone asks any critical questions. And generally, to me, this is a signal that if the team is allowing that, it's probably a pump and dump project or not a reputable project. Now, the next question I ask myself is, are there any VCs backing this project? So I know a lot of people in crypto think VCs always dump on retail, but they provide two clear benefits when they invest in a project. Now, the first reason is if there are VCs, it means you have very little rug risk. The VCs have talked to the team, they know they're real people, they know their whereabouts, their location, etc. If anything did happen, it would be very easy to hold them accountable for it. The next benefit is if there are VCs, you can be confident that they did some level of research. So to get any investment, the developer team will probably have to have some type of roadmap or plan on how they're going to differentiate and build a sustainable product. Now, obviously, this doesn't mean that the project will be successful, but at least there's some plan there and long-term vision. So of course, this is just a framework. It's not a formula because let's talk about DinoSwap for a minute. Now, DinoSwap is a great example of why there really is no formula for this and you have to use your intuition a bit. So yes, DinoSwap had notable VCs, but in my mind, it's purely a pump and dump. It's not doing anything innovative, it's not doing anything special, and it's purely emitting governance tokens to attract TVL and vice versa. So the last thing I use as a signal to determine whether something's a pump and dump or not is actually the UI and the first impressions I get from going to the project's website. So of course, this is not a definitive signal. There's tons of legitimate projects that have funky UIs, but for me, this has actually turned out to be quite an effective method. A couple things I look for here is it overly meme-oriented or childish? And two, is this project, is the UI just a copy-paste fork of a different project's UI? Now, we saw that with Dino just a little bit, but the best example of this is Goose Finance. So Goose was a pump and dump project on BSC, and a ton of different projects forked it. And right off the bat, if you look at this UI, like, your first thought should not be that this is a legitimate project. You can see there's really not much thought going into this. And then if you look on the left here, you can see that all of their offerings are really just copy-paste products that other projects offered. Now, the nice thing about this is that pump and dump developers are definitely on the lazier side. So there are a ton of different forks I could show you that look identical to this, but I'm sure most of you have probably seen them as well. Now, just switching to Goose Finance's chart, just to show you that all of these tokens end up going to zero at some point. You can see it started at, I don't know, $25, went above $150, really feel for the people that bought there, and now it's trading at 89 cents, so pretty much valueless. So that is all I have for you. I hope that was helpful. Again, there's no formula here, there's just a framework. Please comment below if there's any other things you use to discern what a pump and dump is and what's a legitimate project. I think that would be helpful for the entire community. Please like the video and subscribe if you haven't yet. And with that said, I will see you all in the next video.